FM. There's red wine. It's UB Porter redoing the old Neil Diamond hit there. I'm Morning Dave. We're at 8:41 here. It's 19 before 9 now. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. I got a little bit of a case of the jitters yesterday on the markets, outside of a couple of reports that surprised people to the unpleasant side. We got nervous about trade junk as well. Let's explore it all with Philip Statler from Statler Financial Services in downtown Sebring. Philip, good morning. How you doing?
Hey, good morning, Dave. I'm doing okay. It is, it's just, I wish we had a little better news to talk about from yesterday, but it just wasn't a pretty day yesterday.
No, it sure wasn't. But the only good news I can tell you is that gold is recovering a little bit. Beyond that, it just ain't very good out there. Dow ended up down 334 points. S&P was down 36 points. NASDAQ was down 213 points. NASDAQ bumped its nose on almost a full percentage point down. I mean, granted, we're still up in nosebleed territory on the indexes, but the combination of some jitters over whether President Trump is going to whack China with more tariffs and everybody worried about, oh my goodness, is Netflix going to survive? I still am amazed at the fact that an entertainment medium like Netflix can move the market that much. But boy, with a miss for them, just all of a sudden everything just went poo on us yesterday, didn't it?
It did. I was looking at a chart of Netflix, reading a little bit of an article on them, and it was interesting to say the least. Let's see where they are. There they are. You know, they've been as low as I think it was $700 something a share within the last year. They're trading at 11.20 right now. They're down 10%. They were down 10% yesterday. And this is the third time this year that they've had this major fall in their stock price. And the article I was reading was how it was a bear trap. You know, they have two bear traps.
Uh-huh. I was going to say they're still 60% ahead of where they were last year. So if you bought Netflix last year, you're saying, oh, well, shucks, right?
Well, exactly. It's all about now, what's it doing for me now? And that's the issue right now is it's just, so the article pointed out, is this another bear trap? Is it going to hit a certain point and then bounce back up? Or is this finally going to be that Netflix is going to start to fall off a little bit? That's the big question.
Oh, Lord. I mean, it's approaching the status of dinosaur in the streaming industry. So eventually, yeah, they're finally getting held to what an ongoing concern would be held to, and that means, hey, you guys got to make some consistent money out of this thing. And just because Brazil whacked you with some new taxes isn't an excuse we're going to accept anymore. It sounds like they're using the same language they would on GM, Ford, and all the other smokestacks, right?
Yeah, I think they are. They're trying to at least anyway move in that
Pretty
direction.
much. I did notice on the conference call their CEO says, quote unquote, we have no interest in owning legacy media networks. Rumor had gotten out they were talking about buying into Warner Brothers Discovery, and Netflix said, no, thank you, not interested in that junk. They're going to stay a streaming network whether we like it or not. Bunch of stuff. We're kind of at the peak of earnings season in terms of releases out for today, so we'll get rid of the macro stuff as soon as possible here. I did come up with a number that came across one of my tip sheets that kind of made me drop my false teeth. We talked last week, I think, about the fact that the average new car now costs over $50,000. Well, that means big payments on those cars, and according to, let's see here, who came up with this? Fitch Ratings says that 6.43% of car loan buyers are now in default. 6.43%. before we went on the air, I said I don't think that was the percentage even on the mortgage crash in '08. Gives you an idea of just how big a percentage that is of people that are getting a little bit of debt trouble as things tighten up, interest rates go up, and the prices that they're borrowing in order to make those purchases go up, right?
Yeah, exactly. I mean, this is just kind of the first indicator, and I'm guessing nobody wants to put that number out for credit cards because that would be just scared the bejeebies out of people.
Absolutely. That just number. I don't remember what the number was, but I seem to remember the subprime mortgages that weren't performing, that were bundled into all those funds, were nowhere near 6%. And that was enough to scare the bejeebers out of us in '08 and '09. And I just keep drawing that parallel back and forth. Bitcoin and gold yesterday. Boy, it's getting volatile. Bitcoin fell like 3% yesterday. Gold, I noticed recovering a little bit this morning, but holy crud, I'm looking at gold at only, and I repeat, only 41.32.90 this morning on the delayed quotes. Given the fact that it was up around 4,500 just about a week ago, I mean, there really isn't any safe haven left anymore, is there?
Well, at least right now, everything's getting hammered for different reasons. So, yeah, well, we are seeing gold push up this morning as well as silver, but as well as crude oil too. So everything's going the wrong direction this morning.
Now, I don't want to be the bearer of bad tidings, but Bitcoin is up by 1.4% too this morning. So everything's on its way back up. So I don't know whether that's good news or bad news. Earnings season hits the streets big time. The second half of this week, we're just loaded with companies reporting quarterly earnings. Wonder if we can bring the market up with some good news. How did American Airlines do?
So American Airlines, they had stronger than expected earnings, but they still lost money. They lost 17 cents a share, but they were expected to lose 28 cents a share. So I guess that was good news. Revenue was slightly ahead of expectations, not huge. They're trading up about a little over 5% this morning right now.
Don't take as big a bath as they expected. That's good news too, right?
Yeah. So we had Mattel yesterday. We have
Hmm.
Hasbro today. Just the way
Okay.
it goes, right? So Hasbro, um, they beat by 5 cents a share, came in at $1.68. Revenue slightly ahead of expectations. They've come in with expected softness in consumer products, during this next holiday season. They're trading down about 1.8%, 1.9%, right in there.
Yeah, but our dichotomy seems to hold. Mattel had an off one. That means Hasbro beat it. It's a zero-sum game in there somewhere, isn't it?
Yeah, it is.
Yeah, with all the
Um,
manufacturing for toys being done over in China, I would imagine that both toy manufacturers are really nervous about holiday sales. Whether they got everything on the shelves or not is an open question.
Yeah, it is. Tractor Supply, another big retailer we have here in town, they beat by a penny a share. Revenue came in as expected. They're trading down 3.2% this morning. And then I've got Tesla, but I got to dig a little deeper here just to get you the numbers here. So Tesla missed. They came in at 50 cents a share versus 54 cents a share that was expected. So they missed on earnings. They beat on revenue. So that was okay, but they're trading down another 3.75% this morning.
Which I'm sure doesn't help, especially not the Nasdaq price-weighted index in the process. Yeah, their profit was off by like 40% during the quarter, and given the fact that the quarter was while we were trying to push electric vehicles because the tax advantages were going away. That really was a big disappointment on Tesla's part, doesn't it?
Yeah, it was, and you have to remember, and maybe people don't really realize this, but being kind of in the tax aspect of things, Tesla this last year, because of the number of vehicles they sold, you couldn't get a tax credit. You couldn't get the EV tax credit on a Tesla.
Oh,
Um, yeah, but Tesla was discounting the same as you would have gotten for the EV credit.
okay. I'm not really lucid on the way that tax credit worked because I haven't been in the market for an electric vehicle. I just thought it applied to all of them.
Oh no, no, it's based on by manufacturer, only so many vehicles. Yeah, and now we don't have to worry about it because it's gone.
Okay, yeah, no. So I'm learning history instead of current events. I'll take
There
history
you
too
go.
sometimes. What else do we got? I know there's a bunch of names out there.
Really, when we look at names, let me see if I can find that thing. Yeah, no, I closed it. Sorry. Let me see. What was it? Here we go.
When the list gets this long, it can get confusing for both of us, right?
Yeah, it does. It's there was a couple other ones that looked interesting. So we had Tesla, Las Vegas Sands. Not that we all
Okay.
go there very often, but hey, they had an okay quarter. They it looks like they beat on both earnings and profits. They're trading up almost 6.3% this morning. Staying with kind of the hotel theme, Hilton Grand Vacations, not Hilton, Hilton Grand Vacations, the timeshare company reported stronger than expected earnings as well. They're selling timeshares, I guess. Okay, they're up almost 5.3% as well.
All righty. About the only tidbits that I got in the process for stuff that we don't have full reports on. IBM reported slowing cloud revenue growth, but they were upbeat as far as their third quarter. And Moderna announced that they were going to halt development of a birth defect vaccine. So their numbers are going down this morning, too. Boy, after a really good start to earnings season, we got a few misses. Put it all together, and we were off yesterday by a measurable amount on virtually every major index. 45 minutes before we open, what are we looking at today?
Well, there's some red ink today, Dave. The Dow is down about 0.2% right now. S&P 500 is down a little less than 0.1%. Nasdaq 100 is kind of like the Dow; it's down almost 0.2%. But the Russell 2000, it's kind of reversing everything. It's up a little over 0.2%. So not everybody's in the red.
Take what
The
we can get.
That's right. On the other side, it looks like silver and gold both taking a little bit of a bounce this morning. Silver's up 2.5%, gold's up 1.9%. But as those are bouncing, so is crude oil, up a whopping 4.5%, Dave, to $61.16 a barrel right now.
That's got to have something to do with the restrictions on countries that are buying oil from Russia, just anticipated demand from conventional sources, because I've heard no other news on that. Looking across the pond, the Asian Pacific Rim, we're mostly up over the evening hours. 6 a.m. close, the mainland Chinese market's open about 0.25%. Over in Europe, it's a little bit more of a mixed bag, but we are looking at mostly green ink. The average European index up by, call it, about 0.1% halfway through their trading day. Got a lot of stuff going on this weekend, and if you got a retirement in the offing, a lot of stuff you need to be talking to Philip about. Before we talk about Shred Day, let's tell them how to find you to get their retirement plans in order.
They give us a call, 863-382-0037 to schedule their core retirement analysis. That's 30 minutes, you and I on the phone, making sure that you're on the right path to the retirement you always dreamed of. And then you can come see us, actually, Saturday morning, Shred Day, where we'll have a shred truck there from 9 to 1 on the corner of East Center Avenue and Mango Street. That's right across the street from the First Baptist Church on that grassy parking lot over there. We'll be set up. We've got the Seniors Against Crime going to be there. We've got the Heartland Food Bank going to be there collecting non-perishable items. So come out and see us, and we'd love to meet you.
Sounds like a plan, and I'll see you there on Saturday morning as well, because I'll be broadcasting live over on OJ. Have a good day, my friend, and we'll catch you in the morning, all right?
All right, man. Have a good one.
Thank you. It's 105.7 Light FM and Statler Financial Services, Philip Statler. The crooks in the world are getting smarter, so to keep yourself safe.
Hey, folks, again, I want to thank you for joining us today. Hope your day go well. I'll talk to you again tomorrow. Bye.